This is your humble coach Erudite. The reason why I decided to create this video is to explain the reason behind why I took the trade on VIX 100s. You see, your goal is to trade like the sniper and not like the machine gun. Once you trade at this like the sniper, you aim at something. You don't just shooting anyhow. Now shooting anyhow is just like you entering trade anyhow, and this is how you lose your money. In this business of forex, considering the country we are, the little money we have is worth to keep at this current time when we have economic crisis. Once you have $1, before you enter the market, please look carefully. Even if it is said that there is loss in the market, well, it's normal. Profit and loss in forex are the same position. It depends on how you take it. If you want to be profitable, work toward becoming profitable. That is, your profit should be more than your loss. Loss is inevitable, but that doesn't mean you should be making loss. And that doesn't mean you should be entering trade anyhow. I want to show you something on this chart this evening so that you can take notes. It's applicable to other assets that you trade. The trend is your friend. Zones are your friend. Please have this at the back of your mind. Now, what was the reason why I took trade? The trade has been on a downward trend. Now, you may decide to have a clean chart, not having trend line. It's fine. The reason why you need to mark trend line most time is for you to know where the market is coming from, know where the market is going to. So let me bring the chart back, the line chart. The line chart is just like a guide. It's to tell you that the price is going in a certain direction. Now, from what you can see here, the price has been breaking structures. Here was the major market shift. There was a market shift from this point, right? Now, here was my swing my swing low, and here was my swing high. Anything you see here seen as internal swing structure. This is H1 break of structure, H1 break of structure, the no market. And here was my higher high, higher low, higher high, higher low, higher high. If you check, this one is H1. I just mark it as H1 swing, H1. If you check this light green, there's another light green here. This for H4. This is another H4, right? And I think I have another H4 swing leg here. Now, how do you take trade? Alright. If I'm swinging on synthetic most time, I just swing, look to take trade on H4, basically, right? And I wait for profitable trade. And I do take scalping trade most times. That is 1:3. Alright. These are trade that are seen profitable, somewhat high profitable. But when I see high profitable plus setup, that is when I do swing. Now look at this particular trade. Look at this particular trade. Now look at this thing I'm trying to show you. I'm picking my Fibonacci from here to here on H4. Look at what price did. Price crossed this 60. I need to change this to 62 now. I have my reason. Let me change this to 62. Okay. Alright. Price crossed the 62, and if you go to a lower time frame, you see a demand zone here. And the reason why this particular setup from here, if you took trade from here, said I did not take this particular trade because when I've not been trading volatility 100. Alright, when I analyze this trade, like it was from this point I analyze this trade. Now, this is what you need to take note. Once you have a trend line, right? A trend line, and you know that price is still pushing up. There's no trace of reverse. And remember, we just have a market shift here. We have first break of structure, second break of structure. We can't see that price can just start pulling back any moment from now, except this is seen as a sweep of liquidity. But for price to break structure one, two, it means before price can even break this trend line, we can have one, two, three, or four touch before it break the trend line. So it means we still have a view that the market is going upward trend on any time frame, be it on 1 hour time frame or 4 hour time frame, because we are using H4 as a backing to the rest of the lower time frame. Because our major focus, when you are praying, you look up to God. All right, you can go to your pastor to pray. Your pastor could be the H1, but if you are look, all your prayer is going to God in heaven. So I just like H4 as the highest of all. So any trade you are taking set up, you need to fall back to H4, all right, which is the mother of all. Now, if you are taking trade and you see discover that trade is going up like this, and as it's reversing back and is closer to the trend line, just know that any POI closer to the trend line is your area of interest. And if you now discover that you now have a reversal candle in this area, if you go to H1 now, you'll see that there's a demand zone here and there's a demand zone here, right? Now, the reason why price pulled back from this point is that on H1, there's a demand zone in this particular area. All right, there's a demand zone and price tapped to it and it's very close to the trend line and price push up. Now, let's come to this one also, the second swing leg from the low to this particular high. And look at what you see. Now, if you go to a lower time frame, there should be a demand zone here. And then again, we can expect price to break through the trend line. Look at what happened in this particular area. Price respected this particular demand zone here and still in the range of that trend line, it pushed back. This was where I took trade from. Price came to a supply zone here on H1, close to the trend line, and it forms a reversal candle and push up. So if by tomorrow price come back to this line, because we have one touch, two touch, the third touch now, I need to be very careful. Once I see a reversal candlestick, I can take the trade. Now, this is on H1. If you have any question on H4, please drop in the group. So let's go to H1. Now, this was one of the trade I took. It did me shaggy in this area. In fact, I should be honest with you. I blew $50 on this trade. Yes, a mistake learned. We keep learning every day. Now, this on H1. Remember, all these blue dots you are seeing are H1 leg, swing leg, and all these ones, light green, are H4. Now, look at. So let me zoom clearly now. Remember, we still have our trend line in view. And even after blue money, look at what happened to here. All the money I blew here, I recovered it from here. Now look at this particular area. Price from higher high, lower low touch the trend line. Alright, after a change of character on a lower time frame, this scenario is just like a market shift on a lower time frame, and price did something here. In fact, I made profit to this point, right? I left the trade, right? I left the trade and I still blew the money. Now, because price did what? Pull back. So even when price did all this, I never took the trade again, right? Because I was looking forward from buying from this particular area after this IDM liquidity sweep. But I just felt like price broke out from my supply area, and when price came here, there was no solid reversal candle pattern and now went down. I settled to check, look at the chart very well, and now saw what was wrong because every asset have different way of moving. Volatility, like I now study how volatility 100s move. Volatility 100s move like volatility 150s, and they have different differences. Volatility 150s doesn't have stop loss. If you want to put stop loss, it must be very, very big. And it's just that it's minimal. Like it's minimal. Like if you are you can even enter with 0.07 cents. Let's say that is what you have in your account. You have $1. You can enter trade on volatility 150s, but you can't put stop loss. That is why I don't love trading it. So now I now really understand this particular movement on volatility 100s. Now look at here. I watch it closely. I say, you this guy, you think you can try me? So I now build my Fibonacci 2 from here to here. Oh, sorry. Right. My Fibonacci 2. I discovered that we sell from the premium and buy from the discount. Price crossed my 50%. Now I now feel like okay, this is my major optimum entry. Buying from this one is not bad. Reason because I have a trend line going up and there's no possibility because I don't see price coming down because of this rejection candle. You just snipe it on H1, right? And if price is to come to this demand zone, it means price may possibly try to come to this demand zone here after taking this as liquidity. It means price may possibly end up changing direction because price will end up crossing the trend line. So when I saw this rejection candle, no, I just felt like no, price is reversed. I remember on H4 I showed you what happened, and this is an inducement here, right? This is an inducement here. Sorry, this is an inducement here, and there are some form of small imbalance here. So when I noticed this, I remember this is close to the trend line, and there's a rejection candle. Can you see that pin bar? So let's go to 15-minute time frame. So I now went to 15-minute time frame and look at it. On 15-minute time frame, I still saw it clearly. I say no. If I'm to wait, because I say let me go aggressive. If I'm to wait for a market shift here, this is going to like the market can take a while, right? And I went to 5-minute time frame to see if there's a market shift on 5 minutes. So on 5 minutes, here was the market shift on 5 minutes. Remember, I was waiting for this on 15 minutes. Here was the market shift of on 5 minutes. And it's already I have a liquidity sweep on 5 minutes, right? So I now enter from this flip zone. Don't worry, I'm going to make video on flip zone, or we are going to have a class on flip zone. No, it was not on 5 minutes. Let me go to 3 minutes. Let me zoom. So here was the market shift on 5 minutes and 3 minutes, and we have liquidity sweep. So I have a supply here, right? Here was the supply, and I discovered that for price to break out from this supply, it means the demand are in power. So when I discovered that the demand are in power, right, then I just felt like, oh, this is a very good setup to enter from the flip zone. You see this big candlestick here, was seen as my flip zone entry, right? If you go to 1 minute, we are going to see fair value gap here. So I now mark the whole area. Can you see it? The whole candlestick as my order block. The whole candlestick as my order block. Now, flip, the definition is when market change character and price failed to respect the supply zone and price failed to respect the supply zone to push down and first break through it. The next order block, like the buy candle that led to the break of structure, is a flip zone. So I now enter from the flip zone. So price went up a bit, sorry, went up a bit and came down. Sorry, this was the 5 minute market shift. This was what I did. Remember, I dropped it on the group that I want to enter for a sniper entry, right? That I'm looking for sniper entry on, and sniper entry from a lower time frame. All right, this was the market shift, right, on 1 minute. This was the market shift on 1 minute. After the break of structure, price failed to not this supply zone. Sorry, price failed to respect this particular supply zone, and price push up, right? And now we have an imbalance on 1 minute. There was this imbalance on 1 minute, and we have a demand zone there, which is this order block, right? Which is this particular order block. I actually went back to 3 minutes to refine it and cover everything because I don't want to miss out from this sniper entry. So here's the order block. So marking it up together with the imbalance. So that was why the setup you saw emanate. Then let me go to 5 minutes. Like I said, on 3 minutes, I actually mark out the entire candlestick, this entire bullish candle, sorry, bearish candle. I just took it as my flip zone on a lower time frame. So that was why I entered from here. And I already studied the movement of volatility 100s. It's just like the jump. We're just like in boom and crash. That it spike once it spike up on boom, you know that it's going to spike a lot. But on jump, it spike both ups and down, ups and down. I don't want to trade jump for now. I'll still get to that. I'm still studying the movement on jump. All right. See, this is one thing you need to have at the front of your mind, not back of your mind. Any asset you are trading, any asset you are trading, is study the movement. Don't just come and analyze the chart. Study the movement. The way USD is how like the way Euro USD is the movement is different from GBP JPY. So every asset has different way it move. And please, if it's if need be, you need to like focus on one asset. Once you are okay with the movement, you've studied the movement, make it as your friend, get used to it before you jump to other assets. See, trading, profitability in trading is has to do with discipline and consistency. It's not jumping from one chart to another because you know how to analyze charts. All right. For you to get this type of move like this, you need to be study the movement, know what is going to happen, and I believe you understand from my explanation. If you need more further clarity, all right, you can open call so that we jump on a call together so that we can analyze the chart together. The goal is to be profitable. I love results more than telling a lot of story on the chart. I trade like the sniper, not the machine gun. I wait for entry. Anyone that I do take sniping scalping trade, but I still look for sniper entries. All right. trade that are high probability profitable setup. If I say I'm not going to trade for this month again, I think I'm fine. All right. So watch this video and take your time. If you have any question, please ask me.